Welcome to the first income report on this channel. I'm going to go over the business that me and my wife run. It's called Packet 6. We run it as a side business. And in this video, we're going to go over the Q2 2022 income report. Now, the agenda that I want to talk about in this video is to kind of go over the highlights of Q2. Then we'll dive into the income analysis, followed by the expense analysis. Then we'll go over the lessons learned in Q2 and talk about what's next. So why do we do this income report? The income report is really a journey for us. It's meant to document our roller coaster of running a business. And we're just a 2-employee team, just me and my wife. And so again, this is the first video of the income reports, and hopefully this provides a way to add transparency to what we do in the business as a side business, so that for those of you who are doing the same thing, that are embarking upon the same journey, can learn from our mistakes and gain from our successes. So you can find a lot of our other income reports down in the description of this video. So why don't we look at the highlights of Q2, because it's important to reflect back on what went right and also what went wrong. First thing to highlight is that we were able to bring on 3 net new clients for new business. And one of them was a company in data software as a service, another in the biotech industry, and also one company, a large retail company that needed help in warehouses. The second highlight for Q2 is that we were, as quickly as we were able to bring on these 3 new clients, we were also able to complete these 3 projects within the, or by the end of Q2, which is great because now we don't have to drag out these projects, but also we're able to invoice as soon as these projects are done. So therefore we can have revenue for Q2. The third highlight is being able to grow a new service that we've been offering to select clients called Managed Network Services. And really this allows us, Packet 6, to be an augment to an IT team where we provide network engineering expertise, where that one dedicated network engineer or multiple network engineers, it just isn't possible for these organizations. So we act as the network engineer for them and do things like firewall management, configuration, network design, and also assist with our specialty in Wi-Fi. Diving into the income analysis for Q2, our revenue was $122,160. Now this is a negative 50.5% decrease from the last period. In Q2, we had much less hardware reselling. We just didn't sell that much hardware, and that really contributed to the lower revenue that we saw. But we did get from within that revenue $84,500 in professional services. Now, professional services saw an increase of 86.4% from the previous period. We picked up some high value projects in Q2 that were higher in income. We were able to invoice higher for those projects than the smaller projects we usually take on. But also we saw payments come in from projects that we completed in Q1. So that increased our revenue in pro services. Now the third thing to highlight in income analysis was our growth in the managed network services space, where this is, like I said earlier, a newer service that we're offering to select clients. So we brought in $27,500 in income for managed services. That is an 8.3% increase from the last period. So again, that newish services that we're offering, but we're being very strategic about who we offer that to. So we want to be able to maintain the workload and manage it without compromising on the quality and stretching our time thin. If you look further into the income analysis, Q2 was much lower than Q1. Right, we saw our actual net income after the expenses. So we have our revenue, expenses, and then net income. That is the actual money we take home. But we saw our net income decline about negative 184%. Now, that is such a bad number for us this quarter, but luckily we have done well in previous quarters. But this is due to the higher expenses that we incurred, the lesser revenue that we weren't able to see with hardware reselling. So the decline of revenue was quite dramatic between Q2 and Q1. Our expenses increased in Q2, so I'll dive into that. But our net profit, the actual take home, the money that the business gets to keep, was a negative number for Q2. Going into the expense analysis, we had about $114,000 in expenses. That's an increase of 26.8% overall. And I will say that almost half of those expenses went to taxes. So it's important as a business owner to plan for taxes, which is why we need to engage our CPA. We need to work with our CPA to come up with a tax strategy, something that we should plan throughout the whole year. So when Q2 comes around, because of in Q2, that's where tax day lies, we aren't hit so hard with taxes, right? But luckily we did do a lot of planning the previous year, and we were able to make those tax obligations. Within those expenses, we had $8,300 that went straight to travel. So this included airfare, car rentals, and meals for travel that we usually charge back to our clients. Now, I will admit that some of that expense in travel may be included too much on the meals, right? If you follow me on social, I do like to celebrate the small wins, and usually I do that by giving myself a good meal after I finish a job or a project. So I will be looking out for that in the next quarter, in Q3, and try to minimize that, and maybe not celebrate so large. And then with Clear to Send, we actually had an increase in expenditures. We spent about $1,660 on Clear to Send, and that's because we brought on a producer to help put our episodes and videos together for the podcast. That allows us to free up a lot of time, and then be able to focus on actually just recording the content for the podcast, and then allowing someone else with the expertise to do the editing to do that for us. Now, the lessons learned for Q2 was I had to learn from a deal that I lost, right? So I was working on a fairly large deal, a company an industrial company that had a lot of sites, and they were going through a refresh for all their Wi-Fi, which included their switching. So I kept working with them, developed a quote, but unfortunately that deal fell through. And this is with Meraki Equipment, the competing VAR that was already in this company. So there was us who did Wi-Fi specifically, but also another VAR that they worked with more closely. That VAR was able to undercut us in price, and I think take a loss on margin just to maintain that business. So the only effort and work that we put through was trying to create an accurate bill of materials. And so all that work that we did, we ended up losing all of the calls and meetings. So needed to learn some lessons there as far as trying to determine the actual, or not the actual, but estimated win rate for these types of clients, and also being able to communicate better with the end user, develop those relationships, nourish those relationships. So maybe they would go with us instead for some additional services beyond just pro services, but maybe also providing the equipment. Now, the other lessons that we learned is we're slowly rolling out managed network services. So this is only for new or just for selective clients. And we want to do this slowly to understand what exactly the workload could be, what are the type of requests that some of the clients will make. But we're providing this as an augment to the IT team currently, where we will be the network engineer, but we're not on staff. We're not a full-time employee for that company, so they don't have to pay benefits for a network engineer and have to maintain the talent as well. Now, the third thing, a lesson that keeps coming back is time management. And it's been really tricky trying to keep this top of mind because, again, Packet 6 is a side business and I do have a full-time job. So I have to dedicate my time to my full-time employer and not have to sacrifice things, right? So there's this constant balance that needs to happen with the current engagements that I have and also dealing with the full-time work. So time management is always key. I pay attention to my calendar a lot, and I have a to-do list that I follow religiously. So what's next with Packet 6? The first thing is we're going to be focusing a lot on QuickBooks because we want to prioritize time to QuickBooks that we use for accounting. And this is to increase our financial efficiency and also the accuracy of our books. Eventually, we'll offload bookkeeping to someone else, but ideally, we want to learn how to use QuickBooks well so we understand where the business is going and be able to make smarter decisions. The second thing that we're working on is redesigning packet6.com, and we're redesigning it to enhance a story that we're trying to tell to our ideal clients. Now, this is how we've really gotten a lot of our clients that come onto the website and they see exactly what we're trying to address. And right now it is a big push on just Wi-Fi specifically, and we'll slowly start to add on the managed network services. The third thing is really nailing down the processes that we have in place or don't have in place. We're a two-person team and the processes are critical because sometimes we do leverage subcontractors, and so we need to have a process in place so that things are consistent, we know what to expect, and also what subcontractors expect from us. And this will help as we continue to grow because we're having small growth, and I think we will continue to see that growth over time in the next, I don't know, 6 to 12 months. So those are the three things, what's next for us on our plate. But I want to thank you for watching this video, and I hope you learned something. If you have a question, let me know down in the comments below. I'm more than happy to answer them and maybe generate some more videos if you find these income reports useful. Thank you.